This is the luxury world. Get inspired with us today and tomorrow. The world of luxury watches has long been synonymous with exclusivity, and no brand embodies this more than Rolex. For decades, pursuing a Rolex timepiece has often involved navigating a complex web of authorized dealers, enduring interminable wait lists, and sometimes playing a game of favors in purchase history. Now, 2025 may mark a turning point in how these coveted timepieces reach the wrists of their admirers. In this video brought to you by the Luxury World, we will explore an intriguing topic on the Rolex bold move for this new year. If you have not already, be sure to subscribe to our channel so you do not miss out on future content. The Rolex 2025 price list has unveiled a profound transformation in the luxury watch market, signaling a shift that goes far beyond routine price adjustments. The most striking development is the substantial price increase for gold Daytona models, which surged by 19% to €49,000, while steel models have experienced a comparatively modest rise of just 2.6%. These pricing changes are not mere tweaks. They represent a complete restructuring of the purchasing experience. Traditionally, buyers seeking high-demand steel models would purchase precious metal watches as a means to secure a spot on wait lists. However, with secondary market prices for gold watches now falling below retail, that strategy has lost its financial viability. The once common practice of acquiring a gold timepiece as a stepping stone to a steel model is now economically irrational, forcing a reevaluation of the entire buying approach. The evolving market dynamics were further underscored by a significant revelation from Brian Duffy, CEO of Watches of Switzerland, one of Rolex's largest retail partners. In late 2024, Duffy disclosed an unprecedented shift in Rolex allocation strategy. While the total volume of Rolex watches supplied to authorized dealers remained stable, the composition of those shipments underwent a dramatic transformation. Historically, Watches of Switzerland relied heavily on high-margin precious metal models, such as gold Daytonas and platinum Day-Dates, which formed the cornerstone of their profitability. However, Rolex has begun prioritizing the distribution of steel models while simultaneously reducing the allocation of precious metal pieces. This shift carries significant implications for the entire authorized dealer network, with smaller retailers likely facing even greater challenges as they navigate this new landscape. This market evolution is creating a challenging environment for dealer profitability. The profitability of authorized dealers is being squeezed from multiple angles. First, high-margin precious metal watches are becoming increasingly difficult to sell at full retail. These watches have traditionally been essential profit drivers, helping dealers cover substantial overhead costs, including prime retail locations, highly trained staff, luxurious showroom designs, and mandatory store renovations dictated by Rolex. Second, as dealers receive a greater proportion of steel models, they must contend with thinner profit margins. While these watches are easier to sell, maintaining the same revenue levels requires a significantly higher volume of transactions, leading to increased operational costs and logistical complexities. A third critical factor is the growing transparency in pricing, which is eroding dealers' ability to maintain their traditional negotiating power. With an abundance of market data available from sources online, potential buyers are now better equipped to compare retail and secondary market prices. This newfound access to pricing information undermines dealers' ability to justify markups, as consumers increasingly push for discounts based on prevailing secondary market valuations. Consequently, every transaction becomes a negotiation, further compressing dealer margins. Finally, escalating costs across the retail sector, including rent, wages, and other overhead expenses, are compounding the financial strain on dealers. The luxury retail model was built on the assumption of certain profit margins, but those assumptions are now being challenged by this new economic reality. Market analysts predict that these pressures will lead to a noticeable decline in dealer profitability. Projections indicate that as the allocation mix shifts towards lower-margin steel models and secondary market competition intensifies, dealers may experience significant revenue reductions. While precise figures will vary depending on location and individual dealer strategies, the underlying trends are clear. The traditional profit structure for authorized Rolex retailers is under substantial pressure. The fundamental forces driving this shift, product mix changes, margin compression, and increased market transparency suggest that this transformation is not a temporary fluctuation but rather a lasting reconfiguration of the luxury watch business. Beyond the financial impact on dealers, these changes are also reshaping the relationship between authorized dealers and customers. The long-standing practice of using precious metal watches as leverage to grant access to high-demand steel sports models is rapidly losing effectiveness. As secondary market prices for gold watches decline, purchasing one at full retail in hopes of gaining access to a steel model is no longer a rational strategy. When buyers can acquire a precious metal Rolex for a significant discount through secondary channels, the incentive to participate in the traditional authorized dealer system diminishes. This shift erodes the power dynamic that has long defined Rolex waitlists, potentially leading to a more balanced and consumer-friendly purchasing environment. Further reinforcing this market transition, reports online highlighted another major change in the Rolex retail landscape, such as the removal of the ubiquitous exhibition-only signage from authorized dealer displays. These green and yellow placards, which became a fixture during the post-pandemic luxury watch boom, signaled that display models were not available for purchase. Their removal marks a critical turning point, suggesting that Rolex recognizes the cooling demand in both primary and secondary markets. The data supports this conclusion, with wait times for certain models shrinking dramatically. The median wait time for a Rolex Submariner has dropped from over 100 days in early 2024 to just 60 days by the end of the year, while the GMT Master 2 wait time has been cut in half from 180 to 90 days. These reductions reflect an increase in overall availability, reinforcing the notion that the artificial scarcity model that defined the past few years is beginning to unravel. The declining wait times and the removal of exhibition-only signs provide further evidence of shifting market conditions. Secondary market inventory levels reached record highs in late 2024, indicating a broad softening of demand across both retail and resale channels. The narrowing price gap between retail and secondary markets is eroding the incentive for customers to build artificial purchase histories with authorized dealers. As steel sports models become more accessible, the traditional dealer-client relationship is being redefined. Rather than navigating a system that requires purchasing unwanted models to access desirable ones, collectors can now focus on acquiring watches based on personal preference rather than strategic necessity. Ultimately, these changes should be seen as a positive development for genuine watch enthusiasts. The luxury watch market is transitioning away from an era dominated by artificial scarcity and dealer-imposed purchase strategies toward a more transparent and consumer-driven environment. As precious metal Rolex models settle at their natural market value and steel sports watches become more readily available, collectors are once again able to make purchasing decisions based on passion rather than obligation. This shift represents a return to the fundamental purpose of watch collecting, the appreciation of horology for its craftsmanship, heritage, and intrinsic beauty. The landscape has changed, and for those who genuinely love watches, these adjustments mark the beginning of a new and more authentic era in luxury watch ownership. If Rolex indeed embarks on this path, it could usher in a new era for the brand. By taking control of its distribution, Rolex could enhance its brand image, improve customer satisfaction, and potentially capture a larger share of the market. This move could also help to curb the influence of resellers and speculators, ensuring that Rolex watches end up in the hands of those who deeply appreciate them. Of course, such a monumental shift is not without its challenges. Rolex would need to carefully manage its inventory, coordination, and customer service to ensure a seamless transition. There are also concerns about how this move might impact on the brand's aura of exclusivity. However, if executed effectively, this bold move could solidify Rolex's position as the undisputed leader in the luxury watch market. The year 2025 could mark a watershed moment for Rolex. The potential move away from dealer games and the collapse of waitlists could reshape the luxury watch landscape. While uncertainties remain, one thing is clear: Rolex is not afraid to innovate and adapt to the changing times. Only time will tell if this bold move pays off, but it certainly has the potential to redefine the Rolex experience for generations to come. What are your impressions on the Rolex topic we shared in this video? Let us know by leaving a comment and giving it a thumbs up. Do not forget to subscribe to our channel for future updates. Thank you for watching Luxury World, and we eagerly anticipate your participation in our upcoming videos.